Good morning, everybody, and welcome to the second Collections Technology Think Tank. My name is Colin White, and I'm the founder of Credit Connect Media. This morning, we're going to aim to bring together collections professionals to discuss strategies and assess whether technological innovations can play a role in producing the best customer outcome as we emerge from what we hope is the end of the COVID-19 pandemic in the UK. All of today's sessions, we have 4 sessions planned today, so I'm just going to show everybody a quick outline of what they look like. Obviously, at the moment, we have got this session, which is going to be on customer engagement. We're going to have a 20-minute break between each one, roughly, so that everybody can have a break in between. 10:45, we're going to look at affordability, and then another break. 11:55, another break. After the break, we have open banking, which we've got 4 speakers in that one. And then 1:05, we'll close off with a conversation around business transformation and aim to finish the event around 2:00. As you can see, we've got a lot of interesting areas, lots of interesting speakers. For those of you who've signed up and had a look at the agenda, that's great. To note, you'll need to log in and out of each session. So unfortunately, it's just the way it's set up. But yeah, there's if you have a look at the interactive panel on the left of your screen, that will give you more information about how you can do that. So that's fine. The event as well is being recorded, just to note. So we'll be playing that back probably over the next couple of days at some point. So you can log in again. If you miss any points, have a look at that. So that's something to think about as well. Of course, 2021 is a pivotal year for collections teams and businesses as we continue to venture into the unknown landscape of this year, and what is really becoming a tough world for collections, with new additional regulatory pressures changing all the time, and whether the latest news today is around the vaccines being delayed. So potentially, we'll see how that affects all of our working patterns again. But it looks all more positive, obviously, than this time last year. Of course, in challenging times, we see lots of innovation can emerge, and we see further adoption of new technology, which we hope will improve best customer outcomes for tech collections ultimately. So hopefully that will provide some basis for listening to these conversations today. And with this in mind, we want to get everybody who's tuned in today to interact as much as they can. So if you have a look, I've put up an example of the screen platform for you. You've got the I on the left-hand side there. You've got the I section, which is all about this session, logging into the next session, what's coming up. The important tab I want you to look at there is we've got the speech bubble conversation button, which is what you can use to ask questions. Also have a look at the picture of the person. That's got speaker profiles, so have a look at that as well. You've also got the important folder, which also provides background to our sponsors today who've made today possible. So that is Flexys, Paylink Solutions, Aspect Software, and CallMiner. So I'd like to thank them for their help on this event as well. So let's move forward for this as well, and I'm going to introduce you now to Vanessa Northam from StepChange. Sorry, I should say as well, this session is kindly sponsored by Flexys, so we'd like to thank them for that. But before we start, I'd like to hand you over to Vanessa Northam, who's going to be chairing all 4 sessions today, and she's going to briefly give us a bit of a brief introduction about herself. So Vanessa, over to you.
Thanks very much, Colin, and good morning, everybody. Yes, indeed, it is the anniversary of not necessarily working from home, but living at work. And who'd have thought 12 months ago when the Prime Minister announced it would be in a full national lockdown that 12 months we'd still be here, although I am aware some of us are inching back into the offices to get that break from the same 4 walls. So my role today is really to keep the conversation going across all 4 sessions. And as Colin says, we've got some great speakers who are going to share some of their experiences and insights over the last 12 months. My role at StepChange, I joined StepChange 6 weeks before the pandemic, and it's my role to look after all our key partnerships who refer to StepChange into our omni-channel digital debt advice journey. So that's me. So without further ado, I'm going to introduce our panelists. But before I do, I think one phrase that really does resonate as we go through today is necessity is the mother of invention. And I think over the last, particularly if we cast our minds back to those first days of that national lockdown, where all sorts of immediate innovations happened, setting up web forms to give access to payment deferrals and goodness knows what, and that has just continued. So let me introduce our panelists. We've got Melanie Chell from Shoosmiths, Paddy Gilling from Flexys, and Sam Challenger from Billing Finance. So what I'm going to do is just ask the panel to just give us a brief introduction and share one of their observations over the last 12 months. And I'm going to start with Mel.
Morning, everybody. So thanks for the introduction. I'm a partner at Shoosmiths and look after motor and asset finance recoveries mainly. But as a firm, we specialise in recoveries for all types of debt and offer a one-stop shop for debt recovery. So rather than years ago just focusing on litigation, we're now looking much earlier in the journey, from early collections right the way through to enforcement at the very back end of the process, where we all hope we won't get. So from my perspective, I act for a lot of different clients and have seen the impact of the pandemic across all of those different lenders and the way in which different types of lenders have responded to the crisis. So if I was to offer one observation, I think the word supercharged springs to mind. Certainly in the asset and motor space, there are a number of lenders that pre-pandemic were, believe it or not, still very paper-based, just relying on paper journeys and telephone calls, which I know some will find hard to believe, but there was no real need to do anything more. And the pandemic has forced them to embrace that change. And so the speed of change has been phenomenal. And the agility in which some of these organisations have approached and embraced that change and that journey is quite incredible from my perspective, looking across the whole piece.
Thanks, Mel. Paddy.
Thanks, Vanessa. Good morning, everyone. My name's Paddy Gilling. I look after sales and account management for Flexys. We're an enterprise debt management technology provider. So we're built on a very modern tech stack that gives more agility to change at pace and configure, ability to use data more effectively and be more responsive to customer interaction. So in practice, that means we can help improve customer engagement rates, reduce the cost to serve, and make changing to regulatory and behavioural adaptations a lot faster and easier. From our perspective, the last year has been a really interesting one. I think from a customer engagement perspective, we've seen it shift from a lot of organisations having to be very proactive and try and contact customers to when we saw things about payment holidays and payment deferrals, all of a sudden the boot was kind of on the other foot, and there was a bit of a flood of customer engagement coming down to the pipe to our clients. And I think now what we're seeing is people looking forward and seeing, is that a trend that's going to continue, because there are some very proactive conversations going on with customers, and actually what's going to need to be done to keep that level of customer interaction and customer engagement high, so that debts and balances built up during the pandemic and the economic impact on customers can be dealt with fairly and appropriately moving forwards.
Thanks, Paddy. And by no means least, Sam.
Hi, everyone. I'm Sam Challenger. I work for Billing Finance. So we are a small independent car finance company, and we found lockdown to be incredibly challenging. We were one of the companies that had everyone working in our offices. We did very little remote working, and suddenly within the space of a week, we had 100% work from home ability. So our IT guys did pull out all the stops to make sure we were able to do that. And I think IT teams across across every industry were scratching their heads trying to see how we could make everyone able to work from home, still give our customers the best service we could give, and ensure that our agents were supported as well. I mean, Teams, goodness, a year ago, none of us had Teams meetings. Now I think we spend, I don't know, half our lives on Teams. I'm a little bit bored of seeing my photo in the corner of the screen every time I'm working. And the other thing that came out of this was, we all said people were working from home. Well, I was on a seminar the other week and someone said, well, people aren't working from home. People are at home staying safe in a pandemic and trying to work. And I think sometimes that's just a different mindset. People are at home because of the pandemic and trying to work and trying to feed families and trying to continue with normal life. And some people are not being able to work and some people are able to work. And there is just this whole big melting pot. And for me, it was kind of that driver that said, well, we need to make a change so that our customers can get hold of us. We all know that first week of April and the last weeks of March, everyone's phone lines were jammed. You couldn't get through to anyone. Your waiting times were, it doesn't matter how many times you said, the call's important to us, please hold. Some people were waiting for hours. And it was like, well, these were desperate people wanting to understand what we could do for them. So, yeah, mother of all invention happened last year, and it will continue to happen because we've learned so much. It has been an amazing journey for all of us.
Thanks, Sam. Yeah, I think as well as stockpiling toilet rolls and pasta, I think laptops were like gold dust, weren't they? Sort of trying to get laptops. Okay, so that's a really good reflection in terms of what you've seen in your own organisations. And the session today is all about customer engagement. And I think, Sam, you set this conversation up really nicely about the phone lines being jammed. Absolutely. Some phone lines were taken down, in the first couple of days as everybody tried to work from home. So we know that there has been a big leap in terms of use of banking apps and online services. I think Lloyd's has put a report out that said that 51% increase in the amount of people registering for online banking. So you mentioned paper and phones earlier, Mel. Do you think customer engagement from a digital perspective has reached its full potential yet? I'll start with Paddy on that one.
I don't know. I think we're really just starting to scratch the surface. I think last year saw a big acceleration in that, and I think some of the phone lines being jammed possibly created the friction needed for people to move onto a self-service journey from a customer perspective who may not have even considered that in the past. But I think what we're seeing is ever increasing take up of that. And as we move towards, sort of, and it's a bit of a stereotype, but younger and younger consumers coming online more, we're going to see even more increased digital engagement from that. A entirely digital native generation. We were talking about it a bit before the session started, that the pace and adaptation to technology of younger consumers is incredibly high, along with the sort of the silver surfers, getting ever more used to banking apps and things like that, because the convenience is really starting to be realized.
Okay, bring in Mel here. From your perspective, silver surfers adapting, or is it very much a young person's game? Oh,
sorry, I'm on mute. I think they are, but not as quickly. So we have really got to think about the different genres of customer base that we're dealing with. And as the FCA have made very clear, even when we're moving towards automation, we still need to have the opportunity for those customers to opt out and follow a different journey that suits them, which is where the omni-channel really makes sense. And so from our perspective, it's trying to work out who is engaging with which channel. And yes, the youngsters are extremely keen to avoid any conversation whatsoever with an actual person. There is the other extreme and the silver surfers that would much prefer to make a cup of tea and spend half an hour talking to us. And when I listen to those calls, they are very different in their approach. And they really want to share with us exactly where they are and what's happened. as opposed to not. So I think we have to be really careful to make sure that we don't completely automate or force customers down one automated journey, because that's what's best for us as a lender. We really need to make sure we're thinking about what's best for our customers.
Absolutely, and I think omni-channel comes there because there may be times actually where you do want to speak, but there may be times that actually you just want to stay online, and it's about that choice. And Sam, from your perspective, you know, where are billing solutions in terms of?
We will always have people in the office or people at home answering phone calls, because some of our customer base do want to speak to us. Simple as that. The other thing that did come to light is some of our customers, we were the only person they spoke to. Now, from a collections perspective, it's probably a not great use of my agent's time, but from a moral perspective and from a humanity perspective, we allowed our agents to have a little bit more freedom to speak to people, because we were the only people some people were speaking to. And I find that quite horrible in the world we live in, but everyone was going through their own struggles, and sometimes families do drift apart and sometimes people are lonely. So we stayed available on the phone the whole way through the pandemic, the whole way through lockdown. We have always had an element of self-serve, but it wasn't great. It was there. People could log online and tell us a few things. They could send us emails. They could pay online. They could pay on our IVR system. But they couldn't really be prompted to ask us a lot of things. So shortly after the pandemic hit, I saw an advert or a piece from a different car lender that was raving about a solution that they had and how quickly their customers had adapted to it and how much information they got from their customers by having this portal that they were able to use. And I was like, well, I want that. I need that. It's not even that I want it. I need that. Our customers need that. So we quickly kind of joined that bandwagon. And I think that's what's going to come out of all of this year is we're all going to look back and see the things that worked, the things that helped our customers, the journeys that were seamless for customers to jump on and give us some information, but still be able to phone us and be able to have a seamless journey between all of it. And it's not just you're pigeonholed. Either you're a portal customer, or you're an IVR customer, or it's the ability to move between it. And I think that's what we've taken away from this is being able to be a bit more agile and having API links in with other suppliers and partners and give our customers what they want from us and to keep learning.
There's not a never-ending pot of money to keep employing people. And I think that's what people have realised. If you were to put actual people on the phones to answer all of those inbound calls, well, there wouldn't have been enough people for you to be able to recruit. So it's just not possible. So other solutions had to be found, which is where the automation comes in.
Yeah, I completely agree. And one of the things that we've been trying to sort of champion throughout is this idea of Omni access, so that no matter which channel a customer engages you on, they're able to have the same level of experience, because agents and self-service solutions, they all have the same data and the same options available to customers. So I think like Sam said, it's not just a payment portal only. There's the ability to declare vulnerability or fill out an INE form and really make that experience a lot more personalized and tailored for that. And I think that's where we're really seeing customer interaction going, is that more personalized approach for it.
And we've found people be a lot more open about their vulnerabilities on some of the forms. We've asked a few questions, granted, but they're the same questions we would ask on the phones. People are more honest. There's none of the embarrassment of having to share some of that, because it is just them getting it off their chest, writing it down, and we will read it and take what we need from it to adapt our strategies for them. And I think that was quite interesting, because initially I was a little bit skeptical. How much would someone tell us if there wasn't the voice, this kind of nurturing voice on the other side? And yeah, it really did open my eyes to that.
That's a really interesting point, Sam, because I think there's a perception that this huge, big, autonomous term, vulnerable, that it's anybody that's vulnerable is always going to prefer the phone, and I think that's that's absolutely not the case. I mean, the Money and Mental Health Policy Institute often quote 50% of people with a diagnosed mental health issue are phone-phobic. So, I mean, from that vulnerable perspective, I mean, Paddy, you said there about sort of encouraging that self-declaration of vulnerability. I mean, has there been? I mean, Sam's obviously shared that there's been a change in what you've been seeing. But Paddy, from your perspective, any particular insights in that aspect of digital journeys?
Yeah, I think it's interesting, and more of our clients are including vulnerability support in their self-service options, and the take-up rates from that are considerably higher than we have seen. Now, that might be because of the pandemic. There's more people who are in a vulnerable circumstance, and it might just be that the messaging and the targeting around that has got better over time as we've sort of worked on journeys with customers. So. Yeah, I mean, absolutely, we've seen an increased take up on that as well, for sure.
Okay, right. We touched on this, I think, just slightly about personalisation. So people expect to be known and treated as individuals, and I think, you know, if you look at some of the sort of the internet giants, you know, they know exactly what you've been looking at previously, and recommendations all over the place. So from a creditor and a collections online journey, what do you think the opportunity is for creditors to enhance and increase the personalisation? Who wants to start with that, Mel?
Yeah, so thinking about this question, I guess open banking is a kind of gateway to an awful lot of information about a customer that we don't currently have if they don't tell us. So thinking about the kind of things that you would be able to see on a bank statement, you can see whether they're receiving a regular paycheck. You could get AI to tell you how often their bank account drops below £100. You can see if they're commuting or regularly buying a coffee in Starbucks. It will give you a real insight into a customer and what is important to them, and lifestyle and propensity to pay and everything else that goes along with it. So I think if we as open banking becomes more accepted, noting that at the moment, you know, it's a fairly low number of customers who are comfortable with it. I think it's under 20%. The last tech person that I asked said that their engagement on the automated open banking route for filling in an INE was under 20%. I think it was 17, something like that, which is still low in terms of who is comfortable to tell us. Probably because they think the information will be used against them. But as that becomes more acceptable and they realise it's going to save them an awful lot of time and probably give them the results that they want and the solutions that they need, because we will be able to see how affordable an offer to pay, for example, is, then I think we will start to really personalise the approach with those customers, because the more data we have, the more information we have, the more we can personalise that call. And bring that even earlier, before they even miss a payment, we'll be able to see that there are issues.
Okay, yeah, we've got an open banking session later on this afternoon, and I'd love to really nail down this utilisation figure, because the ranges are significant. So yeah, we'll see that. I think there's around 3 million users of open banking now, so that number has, I think it's been increased by 1 million. But we've got an open banking session later this morning. And Sam, from your perspective, personalisation, you know, where are billing finance from that perspective?
Probably too far away from where we need to be. We are getting better at using the data. Again, the more Omni channels you use, the better your data becomes, because you kind of know what someone wants, the timings they wanted. You know, the data we get off the back of our channels is the times of day people are working. So again, you kind of know if someone's filling in the forms in the middle of the night, they may be on shift work. What is the point of us trying to ring them during the day? So it is very much, it's one of those, the big fears is how much data is too much data and how much data is too intrusive. And I think we are going to have to straddle that line quite carefully, because if we use the data in the right way, it gives us the best solutions for the customer, like Mel said, around the open banking and getting what's affordable and setting the right plans. But we've still got to overcome a lot of fear of someone saying, well, you're too intrusive, you know too much about me, this data it's too pointed. And it's one thing when you're browsing online and you want the adverts that you've been talking about to kind of pop up. Oh, that looks nice. I think from a mindset, it's still quite different when your collections company knows things like that about you. It's like, well, hang on a minute, that's a little bit intrusive. So it is a fine line to straddle, and we just have to make sure we do it in the right way, because scoring cards in general have got a little bit of a bad reputation around, propensity to contact and the propensity to pay off the back of the contact. If we don't do it right and we don't handle it in the right way, we might find ourselves being banned from doing any of it, which I think wouldn't be the right thing from a customer perspective either.
Yeah, Paddy.
Absolutely. I think, there's a real concern out there about kind of black box AI, isn't there, for, pumping in data and it coming out with computer says X off the back of it. One of the things that we've kind of previously looked at is, because we've done sort of AI and ML around propensity to pay and things like that in the past, but we've also looked at things like vulnerability propensity. But actually, the problem with that is, how do you then contact someone and say, we think you might be vulnerable? Can you then just improve the signposting or something like that? But it gets to that point that Sam raised, where possibly too much about someone, and that actually really puts people off. There are endless stories of people thinking their phone's listening to them because it's they talk about wanting something, the next day an advert pops up for that exact product. And I think that's a real risk, and particularly in a interaction as sensitive as collections, that knowing too much could be potentially a bad thing.
Sorry, I was just going to say, at its most basic level, though, some level of personalization can be really helpful. So if a customer is calling you and your system can tell you from their mobile number which customer it is and immediately open up their case so that the agent can see, and if the case that they're looking at has all of the right information on the front screen, so there's not lots of clicks to try and find out why they might be calling, and you answer the phone, and you immediately know who you're talking to, that level of customer service is really helpful and calming for a customer. We all know, I've been to take my car in for a service, driven into the forecourt, and someone has said, "Good morning, Mrs. Chell," because they've read my number plate. I find that really great customer service, just because they know I was coming, they were expecting me, and they were prepared. And there's no reason why, I'm sure Paddy can expand on this, why if you have the right collection system, it can't help with that journey and and introducing the customer to you.
And that's great on the phone, but how do we replicate that historic contact in a digital journey? And I don't know, Paddy, bring you back in here, but how do you replicate that? Because you're absolutely right. Nobody wants to retell the same story time and time again, and that's a well-trodden path from a telephony perspective. What's the equivalent in digital?
I think it's about design and data really with that. So if you design the journey effectively and you design the re-engagement effectively, you can do things like pre-populate an INE that somebody has previously filled in. That takes what could be a fairly lengthy process down into actually just a quick check, and maybe someone updating that their expenditure's gone up for X reason. Then they can reset up that engagement again. It can be as simple as, we know that this customer from our previous interactions engages significantly more on email rather than SMS, so that the journey that they then go on is more email heavy. And I think it's just about taking the data that you have and trying to use it better. And you can do this really iteratively. It doesn't have to be a big sort of silver bullet and big bang. It's about making those kind of minor changes, A/B testing, champion challenging the entire way through. And I think that's where you can get to a really successful personalization journey without having to spend a huge amount of time and effort on doing it. I think it's those little steps and sort of marginal gains that you can make with that.
Okay. Anybody else on that?
Yeah, going on with what Paddy has said, that the kind of journeys, if someone has previously filled in that they're not working, there's no point sending them a similar journey that again asks the question, are you working? Just tweak your question slightly to say, are you back in work yet?
Yeah.
So that they know that you've absorbed what they told you previously and you've actually acknowledged it. Because having to say all the time, same time, no, I lost my job, or I'm on furlough, it's degrading. ask the questions differently. You've already got their first bit of information, so tweak it. So the next time these customers get that journey, instead of saying, "Are you working? Have you got a new job yet?" kind of just tweak it so that they feel listened to. And that's not really difficult to do. You're getting all the data, so you may as well use it.
It's degrading, and it's a really poor experience for the customer as well. I think, everyone's had those insights when they've tried to contact someone and you've been passed around multiple teams and you have to fill in, even something as basic as your ID and V information. You have to give those security questions 5, 6, 7 times. It's incredibly irritating as much as anything, and you never leave with a good feeling about that business. And I think where customer interaction and positive customer experiences are going to become a competitive differentiator, people need to be really aware of that.
Yeah, and I think, this may not be a popular opinion, but people mostly want to do the right thing and respond to positive incentives. And we're likely seeing a different cohort of consumers coming into collections that have possibly never had a serious financial impact like ever before. But in terms of sort of some of the, the behavioural science and nudge theories and that motivation, what's been the development in that over the last 12 months? How can that be better used to cajole, encourage, support people in collections?
We've been thinking about this and whether there's a social element. So, if you're a mortgage arrears customer, and there's an intermediary acting for that financial institution, could you pay your arrears, and rather than the financial institution taking a fee, some of that fee is going towards shelter. So 10 pence for every £1 you pay, for example, is helping homeless people. And you have great synergy with those kind of charities when you're facing such, terrible hardship and that, you're in the middle of mortgage repossession proceedings. It's whether or not you can build in some social conscience potentially to what you're doing and make that digital so that people do want to engage, because it is a really difficult arena to try and think about how you might incentivize somebody who is in such a terrible time, struggling to make payments, to engage with you. But I think we have to start thinking outside of the box in that regard.
I think you have to show that you're human.
Yeah.
And I really hope it stays past this pandemic, but I think this pandemic has made people realize everyone is human. We're not just, hardcore debt collectors, or you're not just a salesperson. I think, I see it if you go to shops, people just seem a lot more engaged, a lot friendlier, despite the mask, despite standing 2 meters away. People genuinely seem to care. And I think if we can bring that into everything we do, and if customers get to the point that they understand that we are trying to do the best for them, and yes, sometimes what we have to do is not the popular decision. Sometimes what we have to do isn't the comfortable thing, but it is the long-term correct thing. And I think people, I always say to my guys, if you've come off the phone and you would have been happy that your grandmother or your aunt or your father or whoever was spoken to the way you've spoken to that person, then you've done the right job, because that's what you've got to do. And I think businesses will grow if they keep that human touch attached to them. Customers will appreciate it. It's you look at reviews now. People are being reviewed, and customers are saying, "Well, I was in a bad situation, but X company actually helped me. They spoke to me with integrity. I didn't feel I didn't feel victimized. I didn't feel shamed." Well, that's what we have to get out of this. And if we can use some of the data we get out of digital to help us, if we do it with our social conscience and maybe we put more back into the communities we're in, I think that's a really good thing.
Are you suggesting there, Sam, that the deeper that somebody goes into a collections journey, that there's a need for a channel shift away from digital into telephony?
Not necessarily. We've got some customers who don't ever want to speak to us and potentially have never really spoken to us. The phone calls have always been really hard, but they have absolutely opened up to us when they've had a digital channel, because they feel that they can vent and they can get everything off their chest. Sometimes you have to phone and explain something. I think you know that in your own personal life. When you're sending messages backwards and forwards with someone, eventually it's just easier if I just talk to you. So sometimes you get that, but you do have to know your audience. We have got customers who we've almost gone the whole journey through without speaking to them recently, and we've had a better journey. If we've landed up having to go the repossession route, obviously at some point they get a person, but then again it's a face-to-face person, still maybe not a telephone. And we've worked really hard with our repossession agents, and we've had really good feedback. Actually, we had a really upset lady who actually rang us and said the repossession agent was amazing. I understood that the car had to go. I didn't want the car to go, and I was really distraught. The way they spoke to me, and it was really, really good. So that's all you can ask for, is that people are treated appropriately, even when you have to make those hard calls.
Yeah. I think there's a couple of points in that you raised there, Sam. So one of them is there's a stigma around collections that I think the industry's done some massive steps to resolve, and those positive reviews are only going to help in terms of improving customer engagement. But also there's a point there around, self-service and digital is traditionally seen as a very much an early arrears focus piece, but actually there's some really good data out there. And I believe it was McKinsey did a study of collections in the US where they found that late stage collections, actually there's a big spike in digital engagement. So again, because if you target the message correctly and you target the engagement correctly, you can offer people a way out of what they see as a kind of an inevitable spiral into sort of litigation and recoveries. And actually by suggesting that there's a way out through an option that has a very low barrier and no stigma associated with it, you can really improve engagements and ultimately improve customer outcomes off the back of it.
Yeah, and thinking about incentives as well to prompt that engagement, it needs to be as easy as possible. So when I was thinking about what stops me from completing a transaction online, if I have to get out of my comfortable sofa with my cup of tea and go find my purse and type in a number on my cash card, I'm not going to do it. I'll stop and I'll go somewhere else where I can pay instantly using PayPal or some other form. I don't have to move, Apple Pay. And so we need to make sure that we're thinking about actually how easy is this for a customer. It needs to be as simple as possible. So from an incentives perspective, there's no reason for them to drop out of a process. It just happens so in a slick, streamlined way.
Yeah.
Okay, so we started to get some questions and some challenges from our audience. So we almost taken us back, and apologies for missing some of these. But is there and potentially with the level and drive of automation, what do you see from generations to come? Do you see a wealth and knowledge divide, and also do you see human batteries running automation? Now that is taking us right out of the pandemic and out into the future. Paddy, do you want to start us off in that?
Yeah, it's quite an interesting question. I think there's a real danger that there is a divide that comes, and that there becomes a kind of a digital divide, and I think there was some quite interesting studies done around that gap is starting to open up. But I think it really, if you're designing inclusively, and I think one of the things that's been really encouraging on this is it's not let's funnel everything into digital because it's the cheapest and easiest channel for us to engage. If you can keep those additional channels open and make sure there's capacity on the phone and agents who are there to handle maybe the complex cases that digital doesn't necessarily lend itself to, then I think you can bridge that gap and prevent that gap from widening up. So yeah, I do think it's a risk, but I think it's about responsible design.
Okay, thanks, Paddy. Keep the questions.
Sorry, on that topic, I've been looking into inclusive by design, and I was reading a few articles about able-bodied people and essentially disabled people, and how in the workplace we've always known that disabled people in the workplace maybe don't get a fair shout. And people have asked previously to work from home and been told, only senior managers get it, or they've always been blockers. And now because of the pandemic, and now because this has opened up to the majority of workers, majority of the population, there's a lot of changes that have come because of it. And I often sit, when I think in my brainstorm meetings, we're all sitting there with almost one single mindset or one single view. And it is quite arrogant of us not to have someone who is financially challenged to help us with our strategies and with our design. And I think having that knowledge and trying to challenge that, I think will help us with all our journeys. And I think there's a lot more openness to that, a lot more awareness. And I always say to my team, just challenge your unconscious bias, because just because you think something will work because that's your norm doesn't mean it's the norm for our customers. So absolutely knowing your customers, and my customers will be different to the prime customers versus, the mortgage customers. And it is just making sure that whatever we design or whatever channels we have open to everyone will suit your individual customers.
And if we take a sort of broader look at engagement from a consumer engagement, how do you think the pandemic, what could be the potential upside to the pandemic? Has the pandemic started to chip away at not talking about money, that final taboo? What's the role of digital in helping open up that engagement potentially earlier on? Paddy?
I think there are, potential upsides in it. I think, the numbers of customers who would have contacted their creditors and probably had a positive outcome from, a payment deferral point of view, hopefully goes some way to increasing that trust that I think has been missing a lot of the time from customer interactions. Looking forwards, I think that the drive towards digital is probably going to be a positive thing from an organizational standpoint and from a cost to serve standpoint, but also from I mentioned it earlier, from a kind of improving the capacity in teams to handle complex cases. I think we're seeing things like average handling times go up at the moment as people are in more challenging situations, and actually freeing up that capacity to make sure those customers are dealt with appropriately, I think could become a real positive that comes out the back of this. I don't know what everyone else thinks.
Totally agree. We have a phrase, systems for process, people for value. And actually, when we're talking about improving the digital journey for our clients' customers, our teams are enthused by that, because actually all the automation should be taking away the boring parts of the process and enabling them to use their wisdom and their skill to engage with a customer and spend time with them and have more time to spend and add value to that conversation, because everything else that is mundane is taken care of in a process that's automated.
Yeah, absolutely agree with that.
We're saving the people for the real human.
Exactly.
That empathy.
Yeah. Which a machine can't, in my view, a machine yet can't give.
Yet.
I'm sure it's coming.
I hope not.
It's almost here. Okay. So in terms of let's take a forward view. So from the conversations that I've had over the last 12 months, there's been forecasts, and then there's been an announcement from the government or the SCA. So there's been reforecasts, and then there's been forecasts, and then there's been an announcement from the Chancellor. Any absolute gems of wisdom in terms of what you're expecting or what you predict will be the trends over the next 12 months from a customer engagement perspective? I don't know who wants to start us on that. Who's got the crystal ball out?
I think we might have seen a tsunami of calls in when deferrals were announced, which seems a long time ago now, nearly a year ago. But I don't think that's the end of the tsunami. So I expect that the deferrals have, in some cases, not all, but in many cases, propped up a customer for a while. And as the economy starts to open up, we're going to see more customers in more difficulty and struggling to maintain those payments or address the arrears in relation to their accounts. And I think, therefore, all the good work that has been done by lenders in responding to that first wave will stand them in good stead, because I personally think we've just been saving up a problem. certainly in the motor and asset finance sphere, we've got vehicles that haven't been recovered for a very long time. They've depreciated, they've probably not been used, they've not been looked after, they'll need to come back, and there's going to be an awful lot of work to be done. So the more that we can use this time to embrace digital, the easier that will be for our customers and from Shoosmiths' perspective for its clients.
So you're in preparation mode.
Yeah, hugely.
I think there is, as Mel said, there's a lot coming at us. I think people are going to be very desperate this year financially. Certainly in the sectors that I am in, I think people have maybe stayed there or thereabout on float because of the holidays, the deferrals, the furlough scheme. But we all know once all that finishes, there are going to be a lot of businesses that aren't going to survive. And along with that comes a lot of unemployment, and people will lose their livelihoods. And yeah, at that point, what do you do for them? At that point, the businesses are going to have to make the hard calls, and the businesses are going to have to say, those assets need to come in, because that's the only way that your resultant debt is actually going to be less. And it's, we've done a lot of work on resilience for our staff and awareness of potential vulnerable signs. People aren't saying it, but there's definitely a sign there, because I think our staff are going to take a battering over the next, I hope it's only 6 months, but it might be 9 months, it might be a year, because our customers are going to be desperate.
I do wonder, though, if we're going to see kind of a false boom and this coiled spring that keeps being talked about. When is it June the 21st, when things are supposedly opening up? Everybody's going to be so relieved after a year and 3 months in lockdown that there's going to be a period of everyone's just going to kind of forget the reality of the situation and go out and spend. And this is going to create a kind of a mini boom, but actually it might just make the problem worse. So I think potentially as we get into autumn and winter next year, it's where we're really going to see the impact of this hit, because people are either going to go back to normal, or there's going to be potentially yet another wave to be the prophet of doom. But I think that is when the true impact is really going to be felt. So I think that there will be a period where the economic outlook and the reality are even more divorced than possibly they are now.
But even the boom, how many people do you know, people that you work with, that are keen to go and fill a stadium to watch a football match or a rugby match or a concert? How many more of those people are saying, I'm not sure I want to be crushed in with thousands of people anymore. I kind of want that bit of space. So I'm not sure the boom is going to be as booming as we hope it will be.
And people have been in and not spending money, because you can't go anywhere, you can't go out for dinner, you can't go to the pub on Friday, spend your week's wages and then wish you hadn't. And all those things are going to be available to customers again. And so I think a lot of customers have been very prudent actually during lockdown and have used this time to pay down some of their debt. But with temptation in the way, I still think that we're going to see huge numbers of arrears cases coming through.
Yeah, I agree. I just think there might be a bit of an offset.
Yeah,
it's certainly not. It's we're in danger of talking about a segment of one, but it's certainly not going to be a consistency. There's going to be some people who have taken the opportunity to pay down credit card balances that previously maybe were in persistent debt, and utilise potentially mortgage holidays to pay down. There's people who are going to say, we never want to be in this situation again, and are now starting to save. And then there are those people that have been significantly impacted. If we think about the potential future ripples of squeezed income, just as we start to bring this into a close, what about cost of living rises? What about the impact of Brexit? What about the potential for tax rises? What's that going to do to those squeezed, those people who are on the periphery of affordability? Any last sort of predictions that you'd stake tentatively in the ground?
I think it's going to be very tough. I think there's a bit of a perfect storm brewing, isn't there, with all those factors that you mentioned. And I think, again, you got to look at which groups it's impacting. And then I think for customers or sort of creditors, be prepared to make changes very rapidly based on what your data is telling you. And I think that's going to be the most important thing for people coming out of this, is that ability to understand, learn about their customers, and then make changes based on that.
And I think the other thing is, sorry, we're going to have customers who, I think you said, Vanessa, at the beginning, we're going to have customers who've never really been in the debt situation before. And I remember years ago when I did a CSA diploma, I think one of the lecturers said about someone who's previously had to budget is much better at budgeting and much better at potentially tightening their belts. I mean, I know sometimes there's no belt to tighten, but I think we're about to have a sector of people who've never really budgeted and are going to have to learn that and are potentially going to struggle to do that. So I think I think the landscape is very different to what we've had previously. I think this, and I could tell I'm a doomsdayer, but I do think there's a proper recession coming. I mean, you look at the signs, whether it's Brexit, whether it's pandemic, whether it's someone's going to have to pay for this, and it's going to be the taxpayer. And the minute taxes rise, people are going to be squeezed and people are going to struggle, and we need to be ready for that and adapt for that.
Okay, I think that's a great place to leave that in terms of adaptability, in terms of being ready for a number of eventualities, but being able to support, help, and advise consumers at every stage in the digital collections journey or the telephony journey. It's about flex and it's about adaptability. So thank you very much, Mel, Paddy and Sam. Really appreciate you taking time out of no doubt very busy diaries. Thank you. I'll hand back now to Colin.
Lovely. Thanks, guys. That was really good. Really interesting pieces there. And it just, I think, noting on some of those points around the future, and it's just so unpredictable. And we all see this roadmap from the government, but do we really have any confidence around that? And then obviously we're going to see the result of people thinking maybe you only live once and starting to spend money like it goes out of fashion, or are they going to be a bit more prudent? So really interesting discussion there. So appreciate everybody for that. Thanks, Vanessa, for chairing the first session. She'll be joining us again shortly in our next session. And of course, thanks to Sam, Melanie and Paddy for their thoughts. That was brilliant. And of course, thanks to Flexys Solutions who sponsored this session. That was brilliant. If you want to find out more about those Flexys, then have a look on the left-hand side there. You've got a section where you can download resources and obviously click on their website and find out more. We're going to have a break now for around about, or during the next session, so roughly about 20 minutes, so people can grab a cup of tea, catch up with their emails, etc. And then we're going to join back shortly, where we're going to run our next session on affordability and collection payment strategy. So for those of you not registered for that event and you're keen to have a look at that or any of our sessions, have a look at our registration page. It's on the Credit Connect site, etc. Have a look at that and register now. You'll need to log in and join that one. And yeah, I think we'll round up now by saying goodbye, and thanks to everybody who's tuned in. Excellent. Thanks a lot. Goodbye.
Thanks.
Thanks. Bye.
Cheers.